So how many Forex traders do we have out there that are watching this video today that are interested in making the switch over from Forex to trading futures? And you know that with trading futures, there's tons of regulated brokers here in the U.S. And that's probably one of the biggest issues that I've seen and come across hearing from other people and online is about the lack of regulated brokers in the Forex business, say for instance. And I know there's a lot of people that live overseas and in different countries that are interested in trading futures and trying to find, solid, regulated brokers. Okay, and you may not be able to you may not have access to those brokers here in the U.S. So I don't really have an answer for you if you live abroad. But here in the U.S., there are a number of regulated brokers, and I'm not here to sell anyone on any particular broker, but I did a video or two a few months back, and just kind of you can go to the search tool on the YouTube channel, and you can type in broker or regulated broker, and you can watch the video. But I use AMP Futures personally. You have other ones out there that you can use just as well when it comes to trading futures, but you also have to determine the platform that you want to use. What trading platform do you want to use? A variety of them out there. You have TradingView, Ninja Trader, which I primarily use. I've been using that since day one. Sierra Charts. There are a number of them out there. You just have to choose your choice. There's Tradeovate, which I see a lot of people trending towards. So it's all about finding a solid broker that you can use with the charting platform as well. But this video is really about a strategy that I want to show you. If you don't have one and you're really interested in making the switch from trading Forex over to trading futures, okay? I trade range-based charts, and maybe some of you come from the world of trading time or tick or volume-based charts. It's all the same in a sense. We're trading supply and demand. That's a universal way of actually trading, where we have identified areas of aggressive buying or selling in the market. But everyone has their own little twist on it and how they actually trade it. And because I trade range-based charts, I like to, I have, a paired set of charts that I use that help me, for a means of confluence. Because I like to mark my zones on a higher base chart, and then it's all about moving down to a lower base chart. By doing so, I believe that confluence is the key to trading, because the more that you have working in your favor, the better suit, or the more the trade is going to, or the more the probability, or the higher the probability the trade is going to work out in your favor. And that's what trading is all about. It's about probability and looking for the right setups. Not every setup is going to work. There are other factors that you have to practice and put in place if you have a solid trading plan. And one of the most important ones is risk management, knowing where to get in and knowing when to get out quick enough to preserve your funds. Okay. And that could be if you're trying to pass a funded challenge through a prop firm, or if you're trading with your own personal funds live. So let's talk about the strategy. I'm going to kind of go over two setups. I'm going to show you a demand setup and a supply, because I believe, most people probably want to see from one extreme to the other, what I'm talking about in reference to trading supply and demand and using range charts. Okay. So maybe you come from the world of using time-based charts. And if you're ready to make that switch, and you've been looking or trying to find ways to make this switch, and trying to say, hey, I was using this particular strategy when I was trading Forex, but now I need to find something that's going to work. Well, here we go. Pay close attention. And trading range charts, why do I trade them? For one, the clear to the high. Pretty much. That's pretty much the only reason why I trade it. But I also see more opportunities in trading range-based charts as well. You want to make sure that whatever charts you're using, that you're using a higher base chart to definitely depict the overall direction of the market, and trade in that direction when you move down to your lower base chart. So for example, here's a trade that I saw this morning, and I took for a scalp to the upside, and this is a demand setup. Now I'm using a 120 range chart to find or determine the direction of the market. Okay, and as we can see yesterday, the market was definitely selling off here. And once I identify a zone, I like to mark it off, right? Draw it up. So as we were moving lower into the session yesterday, just moving lower, okay, breaking structure lower and just a push lower. We did so into the close of yesterday's trading session, okay, that was July the 11th, and then into the overnight session into the Asian and the London session, we kept doing so. Now, things kind of turned around during the US session, as you can see here. We didn't get our first really true break of structure to the upside until above this area here at 20,447, if you want to say that, okay? So when I saw that we were breaking structure higher on my higher base chart, and then we kind of, here, that yellow line, you see that's the VWAP. So I saw the market breaking above that area. So at that point in breaking structure, again, we're talking about confluence when trading futures, all right? And so I like to, when there's more confluence on my side, again, the trade tends to work out. So when I saw that we were breaking structure above on the higher base chart and breaking above the volume weighted average price indicator, the VWAP, I was looking for a demand, setup. All right, after the break of structure right here. So it pushed up, we broke structure, pulls back, breaks slightly higher here. Now this isn't I like to say a full on, breaking close of a candle above here. Okay, this is kind of like a minor close, not even say close. It wicked that area there, but it did break above this high right here. So even though it wicked above and didn't close, it still did break above. So when it did that, it did. This is an area of demand on the 120. Okay, it's not a significant area of demand, but we were breaking structure, pushing up, pull back, broke slightly above here. So we created some means of demand right there. But now if you scale down, which I'm going to show you when I move down to my 24 range chart, because this is where I took the entry from, you'll see where we actually had a nice push to the upside. So let's do that now. So as you can see, I'm on my 24 range chart, right? All right, so this break above here, where it's right above this area right here at 20,471, that's that push to the upside. So there was a clear break of, well, not saying clear, because again, we wicked that area here out in the 24, but there was aggressive buying right here. You can see it more so on the 24 range chart, okay? And it left behind an area of demand here on the 24, but I'm not interested in taking a trade from this area when the market gets back here. A lot of people do, they'll wait for the draw per zone like this right here, okay, a box, and then wait for the break, pull back, okay, and then they'll look to see, is there within that 120 range zone, is there a 24 range demand zone? And it got close to one within a few ticks. I would call that a go to where you can probably take a trade. But what I like to do is, if I draw off this zone right here on my 20 range, my 120 range chart, let me put this on all charts. Then you can see it here on my on my 24 range chart, my lower time frame. Remember what I said? I like to use a higher base chart and then move down to a lower base chart. And when I move down to my lower base chart, I'm just looking for the market to break structure to the upside and then create a demand zone. That's what works for me. Okay, what does it do for me? It gives me more confluence that the trade, when it moved or tapped into a higher base zone, that it is. It wants to break structure on a lower base zone and pulls back to a demand on a lower base zone, then that just gives me confluence. I mean, I got multiple means of confluence on both charts who are above the VWAP, all right? And that's what I look for, okay? So when the market pulled back into the zone, this is the 120 range zone, I'm looking for it to break structure to the upside. So it pushed down here, it pulled back, broke structure, pulled back, broke below here. And then eventually what it did was, you see it turn back around. It did slightly dip below the VWAP here, but it turned back up, pulled back, broke structure, broke above these highs right here. When it broke above those highs right there, all I was waiting for was a pullback to an area of demand. That's why then what I do is mark off a demand area on my 24 range. So I talk about this all the time across the channels. I mean, here on the channel, across the videos, about the strategy. Look, marking up a higher base zone, marking up a lower base zone, okay? Because that is the confluence we're looking for. That's the confirmation to let us know, are we in position and moving with the higher base chart to the upside on the 120, okay? Mark the zone. Move down and look for a structural break on the 24 range, the lower base chart, and then pull back to an area of demand. So we got a structural break above this area here when the market pushed up. Demand right here. Now, it could have came back down here and tested this area of demand. So you have to be careful about that as well. But if you get rejection with the break and close of the candle above, once the market taps into the 24-hour demand zone, then you can take your shot to go long, right? So once it did that and we get the break and close above with, maybe you guys can't really see this, I'm blowing up a little bit, right here, this candle right here. So maybe you got in around 56, 57. Once I started seeing a break above, I went ahead and got in a little aggressive. But what you want to do is get in at the break and the close, okay? And it does come back. And the reason why it does that is because they know people entered the market right here. They know buyers, retail traders stepped into the market right here, and they're trying to scare you out to close your trade, okay? And a lot of times what they'll do is they'll come right below it, and maybe you have your stop resting right here below 20,445. And I talk about this in the videos, on the trade breakdown videos. Anyone that wants access to the trade breakdown videos, all you have to do is find the link in the description portion of the video to become an elite member. It's only $6.99 a month, but that's where I go into detail, more detail, and show you actual trade setups as well, ones that I posted over on the Discord community, and break them down in detail about the profit target areas, stop loss, where to place your stop loss, the strategy as a whole, my mindset, what I was thinking when I was looking at each trade, and I go in discussion about it, okay? Again, you get the video playlist as well. I did a good market structure video. All that stuff, those additional videos, they are private to the community of individuals that are the elite members, okay? And again, I mean, we have a number of those individuals already, and I appreciate each and every one of you for supporting my efforts, because that's what you're doing, is supporting the efforts of me as a content creator, because I want to see people become inspired and truly be profitable, make it in this business. So by best means, if you're truly interested in understanding and gathering more information about the trade breakdowns, $6.99, a very nominal fee, not much at all, monthly. That's all it is, okay? What you want to do is, the link is down in the description. Click on that link that says become an elite member. When you do that, 2 tiers will pop up. Choose the one for $6.99, and that will give you direct access to those videos. Okay, so moving on. So when we pulled back here on the 24 range chart, okay, we tapped into a demand zone right here, okay? Why? Aggressive buying to the upside. You see it, we break structure right here, demand right here. Pulls back to it, and there's also a gap. If you don't know what I'm talking about when I say there's a gap or the zone is unmitigated, watch some of the videos as well, because I go into detail about that also in the trade breakdown videos. So it pulls back, we get the break and close. The aim is going to look to take out what? To take out the most recent highs, which is right here. This is liquidity right here, because on the pullback, okay, you see it break up, pull back right here. You can get into the trade here, but we want to aim for this high right here. If we move down to the lower base chart, you'll see it. Excuse me, back up to the higher base chart. Let's go back to the 120. It pulls back, so we're aiming for 471. This is going to be, liquidity at the top end of a prior high, or the most previous high. So that's what we're going to aim for. You get into the trade, again around, where am I at? Right here, 56, 57. Maybe you even got it at 58, not 58, 58. Well, 58, you've been just slightly a little late. But anyways, because the candle would have already closed there. But again, pulls back to the zone, takes off, clears 271, and gives you more, okay? So maybe you picked up at least 10 points, 15 points. Let's see, you could probably even picked up maybe 20 points, if not 20 points, let's see. Maybe 18, 19 points if you really held it through, okay? So I'm just here to show you that using chart confluence, a higher base chart, lower base chart, showing you a profitable strategy that you can use for anyone that's moving over, coming, or switching from the Forex to trading futures, all right? Again, about brokers and things of that nature, I have a video. I'll put that video at the end of this video, so you'll see an end cap pop up where there's a video that will lead you to, maybe I think it's 2 or 3 brokers, regulated brokers that are really, known in the business and the industry. And there's others too. I'm not telling you there's not. Actually, Ninja Trader, they have their own brokering services as well. So there are regulated brokers to use, ones that are, how should I say it? They are solid or reputable brokers in the industry. So let's talk about the supply setup, okay? I want to show you a trade. This is on the ES futures, okay? So take a look here. Let's move down. Let me go over now. I didn't see this here. I'm blowing the 60 range chart. Now this is the 60 range chart. I like to mark up zones off the 60 as well, or mark the zones up on the 60. This is the higher base chart that I use on the ES futures. Now, I'm just looking at this here. It actually, this trade I want to show you is from yesterday, the 11th. But what I'm noticing right here, there was a grab of liquidity sweep right below this low right here from, I guess, the 9th of July. Yeah, this week, a few days ago, pulled back, broke below this area here with this wick right here, and then pushed to the upside with this aggressive buying. Now this box right here, I'm using the. Let me take that back. I said I marked my zones up on the 60. You can, but what I should have said was that I'm using the 60 to kind of give me direction of the market, okay? Meaning, are we moving higher, meaning breaking structure and continue breaking to the upside, taking out highs, or are we moving lower? I'm using it as to give me direction of the market. Now, what I saw yesterday, in the prior days, we were bullish, right? The market pulls back. We didn't break below this area, but we did tap into a demand zone, right? Right here, okay? In yesterday's trading session, I saw that, but if I move down, I'm gonna show you where I actually mark my chart up here. I'll go down to my 24 range chart, and you'll see this zone right here. When the market started pushing lower, that red line, that's a notation of the demand area off the 60 range chart. We started pushing lower here, as you can see right here. And when we push lower here, we pull back, we broke structure right here. We broke below this area here at 56.33. That created a supply area right here. All right. So I marked my zone up off, in this case here yesterday, on the ES futures on the 24 range chart. What I did was I moved down to my 4 range chart, okay, and look to see if I could, then once the market tapped back into the higher base 24 range zone, okay, I'm moving down to a lower base chart, 4 range, to see if I can get into a trade. But again, I'm looking for, in this case here, this is a supply setup, so I'm looking for an area of supply to be created on the 4 range chart, but I want to see a break of structure. So now let's move down to the 4 range, and I'm going to show you the trade that I took. Okay, this is everything I just said, but in reverse of on the in reference to from a demand setup to a supply setup. So I marked the zone, that big box, that's the 60. It's not 60 range, the 24 range supply zone. So the market taps back into it. Remember what I said? From that point there, all I'm doing is looking for a structural break and a pullback to an area of supply. In this case here, not demand but supply, because we're going short. All right, the market taps the zone, pulls back, pushes a little higher. We didn't get a break when it first tapped structure to the downside. But this case right here, it broke structure when it broke below this area here at 56.40. This is a minor structure break down to the downside at 56.40. When it pushes lower, it pulls back, okay? Now I'll mark up this area as supply on the on the 4 range chart, okay? And once it taps the 4 range chart, the supply zone, all I'm looking for is a break and close of the candle. So where's the break and close? Right here below 56.40 and say a half or 3/4. Once you get that, you take the trade going short. There's a few areas you can aim for, okay? You can aim for this area of this low right here. You can aim for areas to where the market needs to fill some gaps in. You may see to the left-hand side of the chart, which there were really none. Oh, yeah, there's one right here. So, yeah, down here at the bottom, there was a gap here. If we go back to the 24 range chart right quick, we're going to want to aim for, because it's tapping into a supply zone where there's a break of structure right here, aim for liquidity down here below 56.30, and that's what it did. It went all the way down there and grabbed that area of liquidity resting at the bottom. Why? Because that was the previous low, okay, that the price made before it started pushing higher to the upside and tapped into that 24 range demand zone. So again, we wait for a supply. If I said demand, guys, I'm sorry, I meant to say supply. When it pulled back to that supply zone above on the 24 range, once it did that, again, all we're doing is moving down to 4 range. In this case here, I'm looking for a break of structure and a pullback to a supply zone, a newly formed supply zone on the 4 range chart. So that gives me the confluence. We have a higher base zone, lower base zone created. Okay, look for the break and close of the candle as for confirmation and rejection to get in the trade. And from there, it's just a matter of taking the trade going going short here. So I don't have the VWAP up here. Sorry about that. Actually, I do. It's above. I didn't see it. Above here. So when the market was pulling back to that supply zone, we were already below the VWAP, which is a good, another means of confirmation as well. Now, I'm not using the VWAP to get me into any trades, but all I'm trying to, one thing you can do, you can use certain tools. I'm not an indicator trader, and trade off of any signals from an indicator. But when you see things that are, say for example, the volume weighted average price, tool above us here, is that if it's above us and we are trading below it and there's setups to look for to take trade entries, then as long as we're below it in this case here, because we're at supply, reaching the area of supply means we're looking for shorts, you can go short, right? But again, we're aiming for either liquidity, we're aiming for some area to be filled as far as gaps within the market that may be left behind. So there is one down here, but you might as well hold it out and allow it to take out this area of liquidity down to the downside. So that's all I want to talk about today. And I talk about, setups like these and the strategy, because the more I talk about it, and people tend to find themselves educate themselves and being able to do so by watching the videos. The more setups I show, or examples that I actually show. But this is a solid, profitable strategy that you can use if you're someone that's maybe struggling to say, hey, I need to get over it. I'm making a switch now from Forex, but I don't have a strategy that actually works. But maybe you already trade supply and demand, and maybe you have your own style. And that's the beauty about trading too, is if you have a solid strategy, is test it, to back test it, and really, to see if it's going to work for you in other markets as well. This strategy works across multiple markets, and it also works in the Forex market. I hear, now I don't trade Forex. I just hear that other people that are part of our Discord community have told me that the strategy works just as well using in the Forex. But I trade only futures and primarily the indices or equity futures. So we're talking about the Nasdaq, the S&P 500. I've dabbled in the Russell and the Dow as well. It works. It's universal. Okay. It also works across the board in different other assets when trading futures. Doesn't matter if you trade commodities, currencies, or the financial markets as well, bond markets, things like that. So it works. Okay. But look, if you are someone that's a first-time viewer and you found value in this kind of video, and I'm telling you right now to back test this stuff and also forward tested it. Don't jump right in with your live funds and start going to town trading. Back test it, and look for multiple setups. And, not every setup's going to work. You're going to have to understand that. It doesn't matter what strategy. No strategy is 100%, but it is about, proving to yourself that you can be consistent as well. And be patient. Don't take every trade setup. Take the ones that actually make sense. I have a certain set of rules, and I talked about it in like a video from the day before yesterday, and I've talked about it several times here on the channel. In reference to setup, what I'm looking for. And it's got to be high probability. There's got to be a gap. It's got to be a break of structure. There's a list. There's just a few things I look for to help me get into a good, valuable or high probability trade setup. But outside of that, that's all I have to really talk about today in today's video. Again, if you're not a current subscriber, please take the time to go ahead and click on that sub button. Make sure to turn your post notifications on so you don't miss one of the uploads here on the channel. You're interested in becoming an elite member or part of the Discord is free. Find the link down in the description. Also, if you're interested in becoming an elite member, $6.99 to gain access to the other content as far as the trade breakdowns and other valuable content. That link is down below, as I discussed in the earlier part of the video. Outside of that, if you found value in today's video, I appreciate it if you could so kindly just click that like button. I'd appreciate it. Take care, and I'll see you in the next one.